Hey, best ever listeners. Welcome back to Unlimited Capital. I'm your host, Richard McGurr. Today, I'm going to be interviewing Hiten Samtani. He's formerly the editorial director and head of content for The Real Deal. I'm sure most of the people listening to this show have heard of The Real Deal. They're the guys who always post the traded, whenever an office building sells or something like that in Miami or LA or something like that. So he's recently founded in 2024 a newsletter called The Promote. And actually, I've been a reader of The Promote since day one. The Promote, was just a masterclass in launching a new media platform in this industry. It is absolutely the go-to source of all of the gossip. And, that makes it sound like this isn't serious news. No, this is very serious, very intelligent commentary on the real estate market and all of the drama that goes on in these giant deals in New York, or, every time a big syndicator blows up. Usually you get all of the juice on The Promote. And so there was just a lot to learn here as kind of capital raisers, marketers, et cetera, about media, because I think media is the lifeblood of any modern business in terms of how you're going to acquire LPs, even how you're going to network in your own city. If you've got a big brand and a big platform, it's just an incredible incredible asset for your business, excuse me. And so without further ado, I'd like to introduce Hiten Samtani. Hey, Hiten, welcome to Unlimited Capital. It's so great to have you on. I would start off by saying been a reader of The Promote since, I don't know about day one, but as soon as I saw that you had launched a newsletter, I was all over it. I'm a big Twitter guy. You blew up on Twitter. So,
I caught the last wave of Twitter. I caught the last train out, essentially. Had we started The Promote even a month later, I would have missed out on that initial distribution. Because as you know, Twitter just basically, the niche Twitter at least, just took a nosedive. But I caught the very last bit, yeah. And so it was amazing as I started building out this publication. I had a very specific idea in mind about what to do. And I'm really glad that it's resonating, and I'm glad to be on.
Yeah, thank you. So why don't you give the audience just a tiny bit of background? So you came from The Real Deal.
Mm-hmm. Yeah, so I used to run the newsroom at The Real Deal. I was there a long time, more than a decade. And I basically, when I left, I was head of content. So I oversaw all our editorial initiatives. I was also I don't know what to call it, but the second face of the company. I was doing all the big interviews on stage, schmoozing, etc. And I had an incredible time at The Real Deal. Pre-TRD, I didn't know anything about real estate at all. In fact, I thought it was one of those backwater jobs that you kind of just start, but you very quickly realize, man, if you think about this industry, it's intersection between money, power, politics, celebrity, real estate, history. It's kind of all smushed into one. So I really took to it. But I think one of the things I realized kind of in the last couple of years at The Real Deal was the way that industry people talk and think about their business, the nuances, the humor, the jargon, what they care about, and what the media in general, even the trade publications, chronicle, the gap is massive. I'm holding my hands out wide. And I said, if we could just create something that replicates the way that most of you think and talk about your business, what you care about, what you ignore, I think we might have something there. And that's how 1031 Media was born.
Very cool. So I was saying, when my producer said that you wanted to come on the show, yeah. I absolutely fangirled about it. I was like, I read this all the time. And I think that something you also wrote in your notes was how you just know your audience really well. Yep. And so a little bit of background is that this is a sales and marketing show. Sure. And I also run a media-driven business, big surprise, I'm on a podcast, right? Uh-huh. And, we do the same thing. We have a podcast that's just Denver real estate.
Okay.
And we have made a boatload of money off that podcast. Yeah. Very small, very niche audience, but we pull tens of millions a year out of it. And so
amazing. I
have a feeling that that resonates with you.
Totally. I think ours is a dual. There's that advantage, but there's also an opportunity, kind of a challenge, which I'll get into. So the niche in our case is a little bit broader. It's anyone in the universe of CRE. So anyone funding it, building it, lending to it, profiting from it, getting ripped off by it, all of it sort of falls into our wheelhouse. Now, as you know, as you just pointed out with Denver, real estate is a very local game, and we're trying to do this in a way, we're trying to create a national conversation, a national water cooler conversation. So unlike a traditional newsroom in the business, we don't cover every single deal in Denver or New York or whatever. And instead, we do snapshot coverage. So we're like, what are the through lines in this business that a person sitting in Colorado will read a Manhattan deal and say, man, that's interesting. I'm either learning from it, I'm learning what not to do. So it's a little more challenging in our case because we set out to create probably the only national conversation in real estate, which is why we can take a wonky topic like traveling HFCs in Texas, which is this bizarre property tax scheme that was going on for a few years, and make it palatable and interesting to someone sitting in a completely different market. And so we think that eventually that opportunity will be so large because we have all of the people across all the markets tuning in to get the latest entertainment, the latest gossip about a deal, the latest kind of structuring innovation. We think it's super valuable and powerful in the long run.
Yeah, I think it is too. And a word that you just said there was entertainment.
Yeah.
I think that you said that very intentionally, probably, because I open your newsletter because it is very entertaining.
Right.
I mean, I think you cover a lot of like big characters and a lot of scandals and stuff like that.
I mean, it's just the nature of the business, right? But I think, for us, the recipe, entertainment is crucial to the recipe of what we're building. Most trade publications read one of two ways. I'm gonna try to mimic them for you. This deal was accretive to all parties, and we're really excited to partner with Bob as he embarks on the next. It's just absolute garbage. But because it is, it is LinkedIn. But because it is a specific niche, they still have an audience. It's crazy. Or the other side of it, I'm sitting down with this luminary and we're sitting and drinking Diet Cokes, and it's very ass-kissy. It's very almost kind of deifying these random real estate operators.
I came out of the tech industry, so I absolutely relate to that.
So think of early TechCrunch, very similar, that kind of thing. We said, okay, these are regular women and men doing a really interesting business, but let's treat them like normal people. Let's have some fun. Let's make it interesting to everyone else about them. So we focus, and we don't take shots at people, but we break down kind of the nitty gritty of deals. And our bet is that is interesting and entertaining. And again, when you sit down in a bar with a real estate person or a group of people, it's a fun conversation. Why don't we just replicate the same types of things in our coverage? And it shouldn't be that radical, but honestly, if you compare 1031 and you compare the promote to anything out there, that philosophy is radical. There's nothing else that's actually fun and joyful to read. And I think that what's interesting is we start a very small team, right? Left a huge newsroom to build what started off obviously from nothing. And people appreciate the storytelling to the level that now we're actually breaking a lot of major news as well. Not because they're like, oh, you'll reach everyone through the promote. It'll be like, I know that the people I care about are reading the promote or listening to the promote podcast. And I appreciate that they take time to understand kind of why it's interesting that this is not equity, but it's pref, right? Why is the syndicator raising a rescue pref fund for their own freaking deals, right? Like the chutzpah that they have there is crazy. So we've covered some of these people.
They're a major advertiser of our network.
Sure.
So
I'm not going to necessarily name anyone, but I just think that the players have pulled off some incredible things. And the way we talk about them is, and again, we're just irreverent. And it turns out that a lot of readers, our most dedicated fans, are people that we've written about in this fashion as well. Because again, it is the first time that anyone's treating them like human beings.
Yeah,
with
and
all
I think
the
that
edge and all
like
of that comes. Yeah.
I think they like you, so they give you the tips. Like that's just how it goes.
But it's also, I mean, I think people really respect when someone takes the time to understand a deal, a market, a person, a company, etc. So I get it. If I have a deal that's a $7 million unglamorous deal and I know I can go place it in a business journal or Connect CRE or whatever with my perfect quote and everything, I would do the same thing. I would go to them and get that deal and then frame it and send it to my colleagues. I get it. I completely understand it. But that's not what sort of drives the conversation. That's not what people care about. So we try to ignore all of that and get into what people care about.
Well, I think that you also, because if you were just listening to this conversation and you hadn't read the promote, you might think that this is all just entertainment, and it's not. Like a lot of the stuff you talk about, so you talk about a lot of New York real estate, and I think that that's, I mean, for fairly obvious reasons, they're just like the biggest deals and the biggest personalities.
And it was also, I mean, it's a little bit biased by kind of where my biggest network of information and stuff was. That's definitely true. But also so much of the capital relationships, even for if you look at the multifamily syndicator boom, et cetera, all those debt funds are originating in New York. Now, it may end up in a rinky-dink kind of garden-style apartment deal somewhere in North Texas, but a lot of the capital markets action starts in New York, right? CMBS is also kind of heavily dominant in New York, but we've ventured out more and more.
Well, I was going to say that I think it's actually a good thing because you get in. A lot of my favorite articles that I've read on your publication have been like the nitty gritty of financial deal structures.
Yeah.
And like, your audience well, and you're like, this is the crazy structure that's in this like $80 million office building. And it's because of all of these incentives and all of these players trying to get this deal done. And it's just like incredibly informative content. And I think that you just know your audience. What that also creates is like a highly sophisticated audience is interested in that kind of stuff.
Yeah.
And a very valuable audience.
It's a very self-selecting as well. Like our slogan for the company is actually not for a general audience.
Oh, definitely not.
And I think the power of exclusion is a power that I've been thinking about more and more as a media operator and, very first media company. Hopefully this grows into something quite substantial, but everyone is trying to do everything for everybody. And it just doesn't, at some point, that's not passionate media. That's not interesting media. If you say, all right, you know what? God bless you. Go on your journey. I don't care about you. I don't care about having you in my listenership or readership. All I care about is this crew. And this crew can get big. It's actually quite substantial. If you have 20,000 of the right people reading you, you don't need that much more to make a real business.
And I could bring this back to like, so I'm a writer too, but on like the copywriting side, which is not probably surprising to you. I sell products for a living, financial products.
Yeah.
So Lauren Bichelle, who I've given shout outs many times on the show, was an absolutely transformational consulting hire for us in a number of ways, except I think that the most important thing was that we were beating around the bush about who we were for and who should be buying our products, and that we tried to cast a super wide net on top of funnel of all real estate investors versus who I serve is real estate and small landlords. I want to be very specific.
Sure.
We were went so broad on top of funnel that it was really interesting content for all real estate investors, except that I specifically target real estate investors who are tired landlords and have already made the decision they want to sell. I am not able to convince someone that they should sell, or it's very hard to do compared to all real estate investors. And so we totally pivoted the content to, are you a landlord who's looking to go passive? Yeah. And if you are, we are where you should be reading. And if you are not, God bless you, all that other stuff, but that we just called out who we're for. And that ever since then, life is so much easier.
Isn't that liberating?
Yeah, no, it was totally liberating.
Yeah. It is painful. So for example, I'll give you an example. Elon Musk says, I'm leaving, blah, blah, blah. I'm moving to Miami or moving to Texas. I can promise you 99 out of 100 real estate publications splashing that headline, doing all that stuff. We happen to know that that does not move the needle for real estate operators or the universe of real estate whatsoever. Do I feel a little bit of pain on missing out on that spike because Elon Musk is going to get, of course. But I also know that in the broader mission, it's a demerit on what we do if we cover all that nonsense. Right. But that you still miss the kind of the adrenaline rush of getting the bigger audience, seeing your list grow. There are publications out there that, tout a list of 80,000 people, 100,000 people, 200,000 people. How many are actually reading and saying, you know what, every time something drops from this publication, whether it's a podcast, newsletter, whatever, I stop everything. And I can tell you that our open rates in that first 20 minutes are insane because everyone's like, the promote's here, boom, stop everything, right?
Yes.
That is very, very compelling to us.
Well, I think you said you're at basically 70%. And it's not for me, if I get 70% on one email, I'm like, woo, great result. But I mean, getting 70% on
consistently 3 times a week.
Yeah, that is wild. So what do you attribute that to? I mean, if you want to get technical, you also have really good subject lines and stuff like that.
Yeah. I like to think that I was born with a little bit of a tabloid man in my soul. And I think the best of tabloids when they hit you at the I think about old school media a lot. One of my regrets is I wasn't coming up in the 80s, 90s, prestige magazine era, because that's what in my heart, that's, at Vanity Fair or Esquire, even before that, etc. That was stop everything you're doing and take this in and enjoy this. You're going to learn a lot. You're going to get an appreciation for whatever field you're into, whether it's sport, music, whatever. We're trying to bring those same dynamics to a world that has typically been covered in a very haphazard, unloved way, right?
Mhm.
Real estate is like, oh, where's the money? Show me the money, etc. I really think it has more characters per capita than any other industry on the planet. It's like Wall Street, but you take all the regulation away. It's pretty great. So from a kind of a back to your question, we really think about, okay, the first thing you do, the first challenge in anything is to get them to open, right?
Mm-hmm.
But if you build up enough reputation over time, if you kind of stand for quality and like, I'm going to learn something, I'm going to have fun with my next 7 or 10 minutes, you can almost bypass that after a while.
Yeah.
You know, so we've seen, I mean, once in a while, sure, you know, massive DOJ investigation into big landlords. That's probably going to get a little more love than something else. But for the most part, our open rates are remarkably consistent because they're opening for the promote. They see the promote, they're like, all right, I got to check that out. Besides that, though, there are a few things that I'm learning kind of from sports media, Barstool, The Ringer, all of that, where it's very much you can sort of understand where people lose focus and bring them back with something, right? Mm-hmm. So if you're reading a 500-word article, you need to give people every so often a little bit of reinforcement, whether it's an emoji. You know, people are like, I hate your freaking emojis. We're not kids here. I'm like, I know you kind of hate them, but that visual thing picks your brain up for a second. Or you get annoyed at me, but you get annoyed, you get engaged again, right?
Yeah.
So we see that. We see people coming back, reading the email over and over. We start understanding what patterns matter. And then we're also very good about, even though we pay a lot of attention to the analytics, we are still one of the few places that takes a very editorial lens to what we do, in the sense that traveling HFCs, this is an important story. It doesn't matter to me that someone will be like, I never heard of that. But we know this is important. We're going to write about this over and over and over. And you'll see that by the third or fourth time we write about it, it's becoming kind of a topic of conversation. It's picking up, it's getting traction in the mainstream sort of dailies, etc. We're getting cited in important places. And you start seeing that. But it takes a bit of guts to say, you know what, this is important.
So I think I should pause both for the audience and myself and say, what is an HFC? Because this is the second time we've brought it up, and I imagine that I'm not the only person on this call going like, what is he talking about?
Okay, yes, that's very fair.
Now, Hiten, before you tell us whatever this thing an HFC is, we got to take a break for a word from our sponsors.
So HFC stands for Housing Finance Corporation. Okay. And in Texas, as you know, is kind of the epicenter of the multifamily syndicator boom, fueled by very cheap debt. Everyone kind of flocked into these markets, Dallas, Austin, et cetera, et cetera. Now, a lot of these deals were fueled by ZIRP floating rate debt. All this this stuff is familiar to your audience, right? Okay. A lot of it went to shit, right? And so you have to come out of that somehow, and you need to figure out how to rescue your deal, do something to kind of keep it alive. So in came the structure. It had been around for a long time, and it's an obscure statute in state law in Texas, which was called an HFC. And basically, if you could commit to keeping your rents below a certain AMI threshold, in exchange, you would get a permanent property tax break. And in Texas,
That's a big deal.
Yeah, huge deal. And in Texas, especially, property taxes are your single biggest line item. Okay.
Well, and they go up and up and up.
Correct.
And up.
Yeah. They're brutal in Texas. So if you can wipe them off your tax rolls, a dog shit deal could become an okay deal. An okay deal could become a great deal. And then you can find agency financing. You can find takeout financing through Fannie, Freddie, CMBS, et cetera, down the road. Now, here's the amazing thing. So far, so good. You're committing to provide affordable housing, essentially, or keep units affordable in exchange for a tax break. Win-win. Fair? However, in many of these markets, the threshold that you had to commit to keeping your rents under was already higher than the market rate in those markets. So
that's nice.
In essence, you were basically committing to nothing and getting everything. And so the amount of people and consultants and lawyers and sponsors and loan modifiers, so debt brokers, et cetera, who basically ate this up for maybe call it 2 years was incredible. And billions of dollars was wiped off the Texas tax rolls permanently. There's a glaring loophole. A similar loophole of this kind had been closed a couple of years prior. So now everyone kind of went into HFCs. And the amazing thing was, and I'm sorry that it's getting a little complicated, but the amazing thing was there was something called traveling HFCs. So a random water district or a school district somewhere in like buttfuck Texas could incorporate your HFC structure, and you could
My
use it
mom's
in
from there. You better watch out. No, I'm kidding.
you could use it in like Dallas, in Austin, in Houston, in real markets. So you were basically stripping the tax rolls off of major cities and paying random consultants in these small places. And the state just shut down the law, just shut down this loophole with extreme prejudice maybe 6 months ago, let's call it. And so we've been following that whole thing. So initially, a lot of people are like, Hiten, what is this crazy, boring Texas? I'm like, hang on a second. This is like owning a business, but running it like a lemonade stand, which is your parents are paying for the supplies and you have your thing. It was incredible. So we find very obscure stories that tell a broader tale about real estate. And then we also obviously write about the skyscrapers and the mez sharks and the debt funds and all that.
So you clearly know an absolute ton about real estate. I mean, obviously, and that's because you're obviously super interested and in real estate. So what made you choose like the journalistic route? Because I would say like, it's not like Bloomberg where you're like financial journalism, such like an enormous category, and then it's like, why journalism and why real estate?
I think it's a flip side. Well, two things. One is fate, and one is I was always interested in media. I was never interested in real estate. I grew up in let's call it a town that's defined by real estate. I grew up in Dubai, and I grew up like before Dubai was Dubai. I saw kind of the absolute explosion of that city into what it is now, right? But Dubai was and still is a monarchy, which meant there was no free press there. So you would grow up reading kind of like propaganda newspapers and stuff. So the idea of a free press where you could actually say something interesting that was valuable, that could push against powerful people was very appealing to me. So when I moved to New York, that's what I cared about. Real estate happened because the Real Deal agreed to sponsor my visa, which would let me stay on in the country. So I was like, yeah, real estate, sure. I'll do it for a year. I'll get my H-1B, and then I'll go figure out what I really want to cover. I'm very lucky that I very quickly realized that not only was the Real Deal the perfect place to do it, real estate had everything. Like anything you care about is kind of, you'll find it in real estate. So that's how that happened. And then I think that like anything else in life, if you get deeper and deeper into a field, it kind of opens up more and more layers. So instead of getting less interested in real estate over time, I got more interested to the point where I bet my own future and my company on that world.
Yeah. So that was in about 2024. I mean, what made you want to set out and go your own way?
Two things. So one thing I really took away from real estate people, and you see the promote, we rip on real estate people all the time. They have their, ups and downs. But I think one of the things I really respected was most of them are believers in building their own destiny. And so to build your own destiny, you need equity. You need real equity. So I was very, very senior at the Real Deal. I was obviously, things could have gone, but I wanted to start and build my own thing so I capture most of the upside, right? So that was an important thing. And then again, I felt like there was a massive hole in the market for media that's niche and really, really fun. The broader way to think of, are you familiar with The Ringer?
I'm sorry, no.
So Bill Simmons, the sports writer?
Not a sports ball guy.
Okay. I always
My wife follows the Broncos more than I do. That'll just let you know.
I always thought that what sports and entertainment, the stickiness of that, how do I say this? Basically, I wanted to create an audience that was so devoted and so like delighted by our content, but I wanted to do it in a B2B setting. Yeah. Because I said B2B is kind of oxygen. You need to know what's going on in your industry to compete, to do well, to build bigger deals, to build a platform. But why does all the media look like this trash? Why don't we replicate what people consume for pleasure in a space that they need to do their business? So that's the entire kind of ethos of 1031. The promote is our signature publication, but we're going to have many more. The ethos was bring consumer media dynamics, which is interesting, entertaining, something you can share with your friends, something you can share with your colleagues, bring it to a space that is essential for you to do your business. That was it.
Yeah, I mean, well, that certainly worked in your case because I can think of like 5 or 6 times I've shared the promote on our company Slack channels, like
Like
all the
gossip almost,
time.
right? Yeah,
Yeah,
yeah.
yeah, it's highly viral. So I mean, you kind of landed with a splash, at least on retweet. I've talked about multiple times on the show. I'm a big Twitter guy. In fact, if you
Yeah.
go on my LinkedIn, the description of me is just go follow me on Twitter.
I mean,
Um,
RIP, man, RIP. I used to,
yeah,
it was a magical time, like 22, 23, and then it kind of died.
well, I would say you also had a famous thing, which was you were the guy who uncovered the LP Whisperer. You were
Oh
the
my
first.
God. It's almost,
You
you
were
know,
like a week early on that too.
yeah,
You were
yeah.
like,
I was like,
no, it's him. It's
this is
Jake.
him. It's one of those. There's a very famous AP reporter who calls elections, and he says, "I've seen enough." He says, like, "I've seen enough." Richard McGurr has won the race, right? I was like, I have seen enough from this guy. I noticed patterns with this sociopathic bullshit. This
Well,
is
he
the
did it.
guy.
Okay, we were talking about a guy who like Okay, his name is Jake. We'll just
Yeah,
leave it at that.
yeah.
And
Jake
he like
REI.
habitually, yeah, Jake REI, and he was a like known and persecuted scammer in
Yes,
multiple countries.
yes,
And number two, just kept creating these fictitious characters. I mean, over the course of like 3 or 4 years,
yes.
and like multiple times, and then would keep getting caught. And then finally on the LP Whisper, what you got to hand to him is like he destroyed Retweet. Like,
He
like he
did.
kind of did.
Yeah.
Like he took it all down.
Which
At the end.
summer
I
was
mean,
it?
he
Was
got
it summer
served and sued,
Yeah.
but he took it all
But I
down.
mean, the serve that was also quite performative. I know the people behind it: Scott Everett, big syndicator, and Chris Bowers. Again, I think that you're right. He went scorched earth in a way that it became. See, retweet, like any other Twitter social media channel, is kind of a reflection of the best and worst of its people. So there are a lot of very sketchy operators out there who promise something that they can't deliver on, or have a track record that they kind of hide. And this guy said, I'm going to expose all of them. So 60% of what he said was true. It's just that the way he went about it was like a classic bully, absolutely nasty, no consideration for anyone's feelings or family. And he did it anonymously. If there was someone out there with their own name who said, I believe this and this and this, you might consider them, doing something worthwhile. But this guy was absolutely nasty. So I said, I've seen enough. This is him. Came after me. A lot of people are like, well, all he's doing is exposing wrongdoing. How can you say? I said, just wait.
No, it took a week for people to believe you.
Yeah.
You were like way early.
Yeah. Yeah. I remember I was in France. I was sitting in Marseille, and I was reading the stuff, and it was 3 a.m. and I couldn't sleep. I'm like, I've had enough. This is Jake. I went to bed. I wake up like 60 notifications, nasty DMs. I'm like, you know what? Someone's got to do it.
I mean, the thing
but
about
honestly,
that
that whole thing is just one thing he did, which I like, and I think I say a lot. Retweet is not real life. Retweet is not real estate either. I think the biggest people on real estate are among some of the smallest fish in the real estate pond. Like, some of them are big, but most of them are just normal, have a few deals, stringing together this thing, that thing. The real sharks, the saying, real G's move in silence like lasagna, right? It's not the place anymore.
Yeah, I mean, but the thing that I have to give it credit for, and this is going to like sound bizarre, but I learned almost everything I know about this business before I went full time on there, because I previously owned a business. I made a bunch of money, lost a bunch of money, as one does, but bought some real estate because I started following some people, and then like eventually, I got to give the place some credit.
100%. I think there was a golden time again when an operator would come on, talk their book, but like very, very specific stuff. And then pretty soon, like within half an hour, someone's like, oh, you didn't try this tax strategy, or you didn't look at this. Here's what, and it was an amazing education, even for someone like me who never aspired to get into real estate as such, but just was like, I am getting an amazing sense of how operators talk and think. So unbelievably valuable. I have a big gratitude to that place. It's just that, as you said,
it's over.
It can be broken.
There's no question it's over at this point. Like, because it had a life cycle where it started as like a part of finance Twitter, and then for a moment like became its full blown huge own thing. Yeah. And now it's kind of like finance Twitter is back, the big one again.
Yeah. And then you see, once in a while someone will put like a chat GPT type written post that will go viral, and it'll get picked up, but the overall sauce is gone.
Yeah.
And people have
But
figured out other ways to get into, LinkedIn is God forbid.
I was
But
about to say, you go on LinkedIn right now. That seems to be where all the
it's
syndicators are
fucking
like,
slop, man. It's incredible. Yeah.
that said, like virality built your business. Or is that kind of fair to say? Like, especially in the early day?
When the first 1,200 people that we got was 2 days prior to publication, we had 1,200 people ready. And that gave me a lot of confidence. Not someone who's short on confidence, but when you go out on your own, you definitely feel vulnerable and you definitely feel scared. Like, is anyone going to read this? So that initial burst of signups was from Twitter. After that, though, I was really gratified by people were like sharing little snippets of the promote in WhatsApp. I'm like, yeah, we got something
Oh,
here.
really?
Like just screenshotting and sending it across. And you could start seeing that. And now the podcast, which has become, I think we're top 80 on Apple in business and investing now. So we've grown fairly quickly. We're only 35, 36 episodes in. The podcast has become kind of the water cooler for CRE finance. So institutional debt people are listening and laughing and copying our language. We use a lot of arcane, bizarre terms like AUM gobbling. We talk about Aura being the lowest cost of capital. We really kind of have created our own lingo on the pod, and we're so glad to see that it's kind of filtering through the ecosystem.
That's you're forming the culture there.
Yeah.
So I have a question. Another
Yeah.
thing that you put in your onboarding form here was like, don't go starting a podcast first. I agree with that,
Yeah.
but probably for very different reasons. What was the reason you said that?
It's kind of like Caesar with the crown. You got to say no 3 times before you accept it. The barrier to entry to podcasts is 0. You and I could go start a podcast after this call. The barrier to quality is very, very, very high. And stamina, it's a lot of work to put a podcast together. The thing is, you can guarantee yourself, if you have a decent network, you can guarantee yourself maybe 8 episodes, 10 episodes, right? You can call X, Y, Z, the biggest people you know, put them in a room, do a podcast. But you have to respect people's time. You have to respect your own time. Podcasts are incredibly hard to do. Of all the products that we've stood up, it is the hardest.
And they're not inherently viral is the problem. That's the thing I was going to say, is that it's very hard to get distribution as a podcast.
Yes.
It's more of a place that you send your distribution.
Correct. That's correct. And in fact, I think because of the quality of our thing, I thought that the promote newsletter would drive most of our audience to the podcast. Maybe some, but a lot of it is like, I had someone reach out from KKR's debt team recently. So, sitting in 30 Hudson Yards, master the universe type. Like, absolutely love your podcast. What's your thing? What's the promote? I'm like, oh, you haven't even heard of the promote and you're just listening to the pod. That's interesting. It's incredibly bad form to start a podcast if you A, don't have 50 episodes in you at least, and B, don't have a very clear differentiator. If all you're going to do is, I'm going to sit with 10 people I care about and talk about their career, guess what? There's like 100 podcasts out there. 1 million podcasts out there that do that. So I think it is a very emotionally powerful medium. If you get in, like you guys, I believe, are the longest running show of its kind on the pods, which kudos to you. Just got to keep going, right?
I'm personally the newest show on the longest running show. So I've got a caveat.
Well, I mean, the network is powerful, right?
Yeah. I was just making a joke.
Yeah. But I think that most people will start a pod, invite their friends, and then constantly, this is another thing that we did differently. We specifically set out not to make a guest podcast. Because again, between Will and I, we have a pretty broad network of people. We could probably make it really interesting. But we said we're going to live and die by the quality of the guest. One day we're going to bring on an absolute shark. The next day we're going to bring on like a meh, and it's going to go up and down.
I want to digress on this actually very intentionally, because that is actually our current mandate from our producer or editorial is more monologues, less guest stuff, because I think also as a category, the guest format just gets quite. I mean, clearly you're a guest here, so it's inherently
but it's terrible.
But
it's a very tough thing, and I also think that having a guest for a very specific thing. So we have guests on as well. We've had some really interesting people in the business. We call them on not to talk about their career. That is the most important thing. We say, all right, Mike, dissect this bizarrely intricate deal with us or this really specific trend, break it down with us. And in the context of doing that, guess what? People are going to know who you are. People are going to know who your firm is. You're in the mix. We only talk to people in the mix. We do not bring on people, say, all right, Owen, tell me about your glittering career. Now you're running a big REIT. Great. Who cares? It's like good sound bites. Advertisers will notice. You might make a bit of money, but there's no longevity in that. There's no through line. It's like,
well, also I think you're just not having an impact. Like from
yeah,
a self-serving point of view, and
yeah,
by that I mean like the person putting on said podcast,
sure.
you're not having the brand impact with people would guess. Like
Yes.
you're really not. Like your
Yeah.
monologue shows, or I think the idea of like a regular co-host or a rotating co-host is a
Yeah.
good idea, because I get the most kind of random real estate LinkedIn requests, after my monologue episodes drop.
Yeah.
Like every single time.
Because
Or
you're
like
providing
comments from
value
people.
for someone in a real way based on your lived experience or what you've kind of learned in the field. That's the thing. So we said, all right, we're going to create something that's so addictive that people understand our rhythm and our chemistry. My co-host is oxygen for the pod. You can't do it without him. But we're going to do it. And his name's Will Krasny. He's a GP. So our balance is quite interesting. He's like, I am the one who has the broad view of covering these people for a long time. And he's like, I know how to underwrite a deal. I just locked in my agency debt. I just had a building hit by a freaking tornado. Let's talk about it. So no, these are all true things that have happened. So we can basically bounce between 1,000-foot view and in the trenches in a very fun, effortless way. And then we bring in guests for the right thing.
I think the way you said something, the phrase of going from 1,000-foot view all the way to microscopic, for some reason that just reminded me of a saying, how that's how you know someone is an expert. Because like junior people typically, for some reason I'm just going to keep going on this, junior people typically have an okay version of like the high level,
Yeah.
really struggle in details.
Yeah.
And then mid-level people have the opposite problem. They learn the details and then have trouble pulling out.
Yeah.
You know what I mean? Or seeing like, what is the work you're doing? How does that relate to the rest of the organization? Are you working on the right thing right now? And then like true experts, like the senior, can go like in and out, like all the way down to like, if I have to hold your hand and like do any job in the organization, I can do it. But at the same time, I can zoom way out and work on company strategy. And so like, that's like someone, just an interesting that you made that comment. And it's an area that I've like, I think a lot about. So I don't do sports. I'm like an entrepreneurship.
Sure.
Just like goblin. Like my version of that show is
you
like,
sleep to Founders podcast and you wake up to the new one.
Like that sounds like The Ringer. Like my entertainment entrepreneurship show is like,
I mean, TBPN is an amazing model for what I'm talking about, which is like, take something that you need to do to make money, but make it interesting and entertaining, and have great hair helps as well.
And
So, but
it rules.
But I will say that with us, I'm very open. I do not pretend to be a real estate expert. If you pulled me into a room now and you asked me to underwrite even $1 million deal, I would just freeze. I specifically, in ours, the chemistry, we can toggle between, sometimes I'll be like, okay, let me tell you exactly how this condo building sold. Launching a new condo building in New York is almost like running an investment banking process. And here's why. It's like all hands on deck, very controlled, very sustained. I have a very strong and detailed look into the narrative side of the business. And now, as you know, when you see Blackstone and all these guys go raise retail money because the 401k floodgates have been opened, I can really speak to that because I'm like, I know how perception is created at scale, right? And then Will has that operator's mastery because he is an operator day to day. So neither one of us alone is the expert, but like we can bounce off each other and create something really compelling and detailed.
So I have a question. Because you just brought up something that is a big topic I'm interested, which is the 401k and like alts to retail.
Yeah.
I mean, I think obviously this is a podcast kind of buying for syndicators.
Sure.
And so we're like the direct to consumer type thing.
You guys are getting ripped. Your faces are going to get eaten up by Blackstone and all these guys now.
Okay, go on. Explain.
Oh, it's just that when the big boys decide to compete in an area that has historically been lucrative for the smaller players because it's kind of been left alone, because there was no way to really seriously scale that business, right? If you think of the network of Indian doctors that have been a source of funds for so many syndicators, right? And I'm saying this partially in fun, but I also mean it. Now Blackstone, through its relationships with Vanguard or Fidelity or 401k providers, others have the ability to reach the retail money at a scale. And listen, everyone there's a reason John Gray does his running videos. it's not to appeal to the head of another pension fund or the Saudi sovereign wealth fund. It's to appeal to the wealthy retiree or someone who, has a little bit of extra cash and now has 50 or 75 or 100K to put into something. And they're like, oh, Blackstone's got a Delaware statutory trust. I'm in, So much of retail is kind of a broad public perception. And now the big guys with their machines and their investment sales relationships and all of that are going to come for that money. And again, it's a massive pool of money. It's plenty to go around, but they're going to try to capture more and more of it.
Okay, so for that argument, then why wasn't that money going into REITs? Because that vehicle has been around the whole time.
Yeah, I mean, BREIT is a really interesting example.
No, but I mean like public REITs. Like public REITs have been around since the 90s.
Yeah,
so,
I wonder if it's because everyone has always felt that they can do better, right?
Well, that's exactly what I'm getting at.
Yeah.
So I think that a retail investor, the reason, okay, and this is like getting deep.
Let's do it.
I'm talking to other professionals.
Yeah.
I think that retail investors love real estate because it is speculative, and giving your money to Blackstone does not feel speculative.
That's a very interesting statement. But do you think in the wake of what's gone on in the Sun Belt specifically over the last 3-4 years with the massive boom and then the bust and no recourse on a lot of things and sponsors just kind of running away, cases of outright fraud, etc., do you think that's not kind of dampened the excitement for this kind of thing?
I have an answer for that as well.
Let's hear it.
My answer for that as well is that real estate is the oldest boom and bust market in the world.
Yeah.
And that I've lived internationally as well, by the way. And that's one of the reasons that I'm so attracted to real estate. And I'll explain why. And my wife is from Belarus.
Okay.
And so when we got into saving, once we started making money, my wife would not invest in the stock market because she's from a developing country and very smart lady. I mean, we co-founded the business, like and she was a Fulbright scholar. And she was just like, this is Fugazi.
Yeah.
Like I'm not putting my money into that. And then, but as soon as I said rentals, she was like, oh, tangible assets.
I can feel this. Yeah.
Because her parents owned, rental properties and stuff like that. And that when I lived in Asia, it was the same way. I mean, the reason that cap rates are so low in Asia, even though it's low income, is that it's just the store of value, right?
Mm-hmm.
And I believe that there is a strong biological drive to own real estate.
Yeah.
I think that goes back to like, you can watch squirrels fighting in a tree, because this one's like, this tree has like all the juicy nuts on it. You know what I mean? Get away from my tree.
Yeah.
And that I think that because of that dynamic, there are always people coming into this business and they will forget the fraud. It will be in the past.
I agree. I think I agree with that. Yeah.
And I think that giving BREIT your money does not scratch the itch.
Yeah, I mean, and it really shouldn't. The performance hasn't been wonderful in the last few years. I mean,
I could have bought a REIT. It's the same thing. Like, it's who makes the joke on Twitter all the time? Like, oh, do you want to buy real estate at a discount? It's easy. Like, just go buy a REIT.
Yeah, it's true. But also, it's also they didn't realize a promote this year. They couldn't. I think they couldn't take a promote this year. But I think you're underestimating the marketing machines that these mega firms have. And now that they've set their sights not on just a public investment fund or Mubadala, and they're coming after the 401k money, it's going to be an interesting competition. Like, think about what
I don't think people invest in syndications for logical reasons. And like, I'm going to say, like, we're talking to professionals because if you look at like the logical reason, it's super high risk and your portfolio is probably not big enough.
But they always feel like they're a little smarter than the market.
Yeah,
right?
but that itch does not get scratched buying BREIT. Like I think that's why, because I almost did some angel investing when I was making good money. Thank God my wife talked me out of it because all those zeroed. But like, I didn't think it was going to zero at the time.
What about the 1031 DST that Blackstone just launched, right? That might give you some, I don't know. Look, I don't think that your business is going away. I think that there's suddenly competition from a very well capitalized, very well known, broad name recognition, et cetera. So I think, let's say you're a syndicator that's active in a certain market and have a very big reputation in that market. Take a Grant Cardone, for example, or someone even a couple tiers below in terms of name recognition. Everyone knows who John Gray is. And you can see, what I'm trying to get at is Blackstone, before John Gray's era, before this last kind of iteration, was known as this fortress, 340. It was like this black hole of finance, right? They ran money and you don't really know what's going on. They're specifically, deliberately humanizing themselves because they know they want to reach actual human beings now. That's what I'll say.
For the record, I don't think you're wrong. I think that they are going to soak up a huge amount of like
Yeah,
retail AUM, especially in IRAs and stuff like that.
sure.
I just think that because I've thought a lot about why my customers buy and everything
Hmm.
else like that. Because I mean, I have to do that in order to
Yeah,
sell products. Like as a
sure.
marketer, is like it's all about what are you getting out of this? What are you thinking?
Yeah.
And I think that just people that are accredited investors and successful, they have a pot of play money. And I am of the opinion that
Yeah.
that pot of play money is the majority of like syndication money.
I think that's a very good theory. And that doesn't, how do you feel then about something like a crowdfunding platform or, because they've taken an absolute bath. They've been, yeah, you followed, I don't know if you
Of
followed
course.
how Yield Street has changed its name after a
Yeah,
few.
I just saw that. And now they're selling only institutional products. Like you now go to Yield Street to go buy
Yeah,
Stepstone and Carlyle Group.
it's
I was like,
amazing.
what is the purpose of this?
Yeah, yeah.
Like,
Or CrowdStreet, which neglected to hold the money in escrow, and I think 45 million or 54 million, I'm sorry, was taken by that dude called Ellie Schwartz to go
the
buy
rabbinical
himself
court
fucking
guy.
like
Yeah.
yes.
Yeah.
I'm glad someone's reading the promote, but he went and
Yeah.
bought himself like these
Oh, I did
fancy
learn about
Dutch.
that in the promote.
Yes,
Yes, I did.
absolutely. Yeah, yeah, yeah. So it's just it's going to be interesting to see what the retail crush from the big boys, the Hines, the Blackstones, the Brookfields does to the broader market of syndication. But again, I think that being on the ground, having local expertise is always going to matter, right?
Yeah.
But I wonder if your theory, which is like people want to gamble without saying they're gambling.
Well, and they want to own real estate. And
Yeah,
neither of those itches are scratched through like this institutional mega fund.
that's fair. Unless they come up with a new bizarre product that you don't know about, you know?
Fair.
Yeah, I think one thing that finance always does is kind of transmogrify and warp into something new and give you, all right, Richard's talking about having a product that feels more tangible. Let's go into the room and come back with something that does that, you know?
Yeah. No, totally. Um, what is your like what would your advice be then to a syndicator, given all this? I mean, you're surely not saying like go like learn to flip hamburgers. I mean, or is that what you're saying? Or learn
No,
to code?
I think that many syndicators have locked in. And if you notice, you look at the capital structures of some of the bigger people, they have all that, let's call it just for fun, because I'm Indian, I call it Indian doctor money, right?
Yeah.
They have that Indian doctor money unlocked, but increasingly they've got more kind of long-term funding locked in as well. So you'll see that a lot of the syndicators have locked in kind of more institutional capital sources too, because they've built enough of a business, achieved enough scale that they can kind of show, hey, this is a real business and they can do that. I think and again, I am not a real estate expert. The only thing I would say is diversifying your capital sources. So when it makes sense, go institutional. When it makes sense, go to the street. Is just a generally good piece of advice to have. And I
Yeah.
think that just because something worked in that 2021 to 2023 period when money was free and everyone looked like a genius and a lot of them were idiots, doesn't mean it's going to work again in whatever's coming in front of us.
I think that's true. I
And
mean,
that
I'll
ain't
give
real
you
estate advice. That's just common sense.
no, that's true. I mean, we're personally not even doing equity deals anymore.
Yeah.
Like, or really, it's all credit. Like,
Everyone
and I
wants to be a
couldn't have.
pref lender. Everyone wants to do pref.
Yeah, people want a coupon. Like
And this,
the
by the way, this
appetite is.
extends all the way up. This extends from whatever you might be doing locally all the way up to if you look at the Manhattan towers that are going up right now, equity is very hard, or historically in the last 6 to 10 months has been very hard to find, or the last, let's say, year and a half has been very hard to find. But everyone's down to give you pref or mez.
Yeah, I mean, I think what that comes down to, that guy Hunter talks about it a lot, is like people have
Yeah,
figured
he's a good
out
friend.
that they
Yeah,
just want a better claim on the cash flow,
yeah,
or and the cash, and like, what is my claim here? And that so many people were. I mean, they lost their butt in equity deals. And now,
yeah.
I mean, when you make the argument, which is very solid, well, here is the note, your odds of getting zeroed on this note, a lot slimmer. You know what I mean? Like your downside here is partial loss of, okay, obviously your downside is hypothetically zero on any
Sure.
given deal.
Yeah,
Clearly,
yeah.
just that there's much more control on the downside case. There's all these people above you that have to lose their butt before they get to you. And you have like, not going to say guaranteed income, but at least on the paper, it's
Sure.
guaranteed
Yeah,
income.
yeah. I think that syndicators who have a truly differentiated strategy and understand one market cold in general are going to be fine, right? I think where have the mistakes happened. So sometimes there's no way people could have predicted that rates would have, gone through. It's fine. You don't get that, right? But if you kind of stepped into markets that you had no business, you had no knowledge of, and suddenly you're buying 800 units, 2,000 units in the span of a year, due diligence is not realistically a possibility. I spoke with Mike Comparado. He runs Benefit Street Partners, major lender in the multifamily space. It's like, how are they supposed to, walkthroughs are impossible. We have a story coming up to promote that someone kind of certified that the principals had walked the property, and in the same in emails to the principal said, yeah, I told them that you walked the property, but whatever, idiot, right? So how can these kind of things will keep happening when you move very, very quickly. But again, the allure of it, if you're a 28-year-old, 35-year-old person and suddenly you have private jet money and you're scaling AUM to 3 billion, 5 billion, 6 billion, and you're creating so much of your money, so much of your income up front through very generous fees. Okay, you lose some properties, you take some bad headlines, but you made enough money to go away and do something else. So I think the question that I would be interested, as you guys kind of follow and interview so many of these people, is like, how many people come back for round 2? Mm-hmm. And how many people did well enough that they don't have to?
Say 60% of the capital we raise on a monthly basis is repeat investors. So glad I passed that test according to you. So yeah, I mean, coming up on the hour here, Hiten, this has been fantastic. But before we let you go, I want to make sure our listeners know about something coming up. Don't be the one who misses out. The Best Ever Conference is celebrating 10 years, and this year is going to be bigger than ever. Deals get done and partnerships are made. I will be giving my Capital Raising 2026 Playbook workshop on day 1. That's for VIPs only. That's going to be everything from the tactics that I'm using today, what asset classes are selling the best, and like what are the newest, most important tactics that you need to bring into your business to raise more capital today. And all of this stuff is applicable no matter what asset class you're in. You'll also get out to hang out with me and all the other Best Ever podcast hosts, but seats are going fast. And once we are sold out, that's it. We're done. No more tickets. So go to besteverconference.com and use the discount code podcast10, all caps at checkout for 10% off. Now, Hiten, where can people find you and the promote? I mean, and I would say everybody needs to go subscribe to the promote.
Yeah, I think the promote is a really good place to start. I would say definitely read the promote if you're inside the business. If you want just a casual, fun, very detailed catch up, everything, I would really recommend the Promote podcast. And we're going to start having guests, but we're going to do it in our signature way. So it's irreverent, really, really interesting. I would do that. For me, I'm on all social networks at Hiten Samtani. That's HITSAMTY. You can find me on Twitter. I have regrettably started engaging on LinkedIn as well.
Yeah. LinkedIn.
And I'm also,
you can also see everybody on LinkedIn.
You can also email me directly at hiten@thepromote.com. So that's HITEN@thepromote.com.
Sounds good, Hiten. It was a pleasure.
Hey, man, this was fun. I really enjoyed it. I didn't know what to expect. I had a great time. Thank you.